Karen, I will go to you first. This is a major position for you. What does this mean to you?
I mean, it's interesting. You always want Berkshire to be a buyer. Why they want to sell equity, I'm not quite sure, as opposed to some other form of debt or something. They do are very, very good credit. Although they will be using some of the proceeds to buy calls so that they won't be, they'll have ups, basically. So, so I think it's interesting. I don't know that it really changes things that dramatically. I mean, it's a gigantic company. I know $80 billion is a lot of money, but on the scale of things, as the scale changes every day, seemingly, to me, the takeaway is that Berkshire's there. I hope that it's reminiscent of when Berkshire, remember when they first bought their Apple stake? Yeah. That would be great. But on the whole, I'm not quite sure what to make of it yet, but the Berkshire part is, to me, the biggest part.
I mean, we have been talking about all of these companies going to the public debt markets and going around the world to the public debt markets. And here they are finding another way to raise money. I mean, does that signal anything to you that maybe going to the debt markets, they've tapped out on that for at least for the time being?
I think, Google going to the equity market or the debt market any time in the last 5 years would have been seen as why do they need to do this? Unless they were issuing 100-year paper, which, a couple of these guys did at the lows of yields back during COVID. I mean, it looks genius. It's a $10 billion private placement to Berkshire, which, you'd obviously, again, that shows commitment, that shows long-term. Berkshire's been building this position since late 2025. By the way, great run for them. You mentioned it. Google was out there issuing debt-denominated long-term, 10 years. They did this in multiple, tranches across yen, Swiss franc, you name it. They're diversifying outside the United States. I think the capital markets business for the hyperscalers is alive and well for the foreseeable.
I view it as sort of a positive. I mean, $80 billion on a $4.5 trillion company I don't think, as Karen said, it's insignificant. And the fact that Berkshire's there buying some of it, I think, is important. So the fact that the stock is lower doesn't really make a lot of sense to me. It would not surprise me to see this thing higher at some point over the next 24 hours.
Your take?
I don't really think much about it. I mean, it's a huge company. I don't think they could do it themselves if they had to. I think you're going to look at Berkshire. They're going to try to deploy funds in certain different areas. Greg Abel's got to leave his stamp. I don't really think about it that much. Too big of a company.
I do think, though, we have to remember that these are companies that were all free cash flow generators to the moon. Meta's not net cash anymore. So they're a net debt company. Doesn't mean they're an indebted company. It doesn't mean that they have a tough leverage. In fact, they're fantastic from a credit perspective. But I think that's the question. It gets back to what's the multiple you want to pay for these companies, and people were thinking a very different thing, at least for Meta and Microsoft.
Or I know you want to go back to Karen, but what if this is sort of the top in the spend, where they've spent all the money that they want to spend and they don't want to spend?
Do you think that's really
I don't know. I don't know if they're going to ring the bell when they say we're done spending on CapEx. I think that it's just it's something worthy of watching for the telltale signs.
Well, Guy was at a very big number college reunion.
Yeah, so 40 years, Tim, you can say it.
And when you went up to the late in the night to get top off your cup at that keg party, was that your last beer?
I didn't go to a kegger, Tim, just so you know. I mean, we didn't do that. But I like what you're trying to do there.
Yeah.
And it probably would have been my last beer. It would have been my first and last, as it turns out.
Okay.
Is there anything else beyond this?
Okay. No, that was it. That was all I had to say.
So there's a little more color to it. I mean, some of it is stock and some of it is convertible into these mandatory convertible preferred stock, which that is getting closer to a debt-like structure. And then if you add the calls in there, if they convert, sort of Google has that sort of covered. So they also say they have giant CapEx, as we know. They also have some tax obligations and some compensation obligations that they want the cash for.